I'm Matt Steiger with Epson America. Some of you are familiar with who we are. I am responsible for a new initiative for Epson called Epson Cloud Services. And the OmniLink Merchant Services is the platform that we're delivering. We can talk about that at another time, but I'm very pleased to have the opportunity to moderate this panel with some very prestigious personalities in our industry. I'm going to let each of them individually introduce themselves, and we're going to talk about some items that they've already addressed that they'd like to have covered that I think are important, maybe not have been addressed earlier in any of the presentations. And I'm going to kick it off by introducing Thad.
Hi, I'm Thad Peterson. I'm with IT Group. If you don't know IT Group, we're kind of like a Forrester or a Gartner, but we just do financial services. My area of coverage is the merchant side of payments, both online and physical world, as well as I cover mobile and emerging payment technologies. Been there for about 5 years, and prior to that, I was a strategy consultant with Edgar Dunn & Company and also spent some time at Merit's Loyalty Marketing as their head of loyalty strategy.
Great. Just in case anybody needs to get somewhere, Thad's also a pilot, and he holds multiple patents as well. Yeah. And Armando?
Yeah, my name is Armando Guzman. I'm with Qualix. We have been working on the non-bank and underbank segments of the markets, and we have been creating financial services and different applications for that segment.
Great, thank you. And Brenna?
Yeah, I'm Brenna McGee. I'm a payments attorney with a law firm called Dykema. We have an office here in Chicago called Dykema Gossett, and we're changing our name soon, so I'm supposed to just say Dykema now. I was with the Texas Department of Banking for 4 years, so I worked at the state level doing money transmission regulation and licensing and enforcement, and I came over to private practice about a year ago, and now I work with startups on developing their products and if they need licensing to offer their payments products or not. Also work on the enforcement side still, and just provide a lot of advice about the regulated payments industry.
Great. And just in case you get that to drive you or fly you somewhere, you can ask Brenna for how the surf is breaking in Malibu, as she's Californian as well.
That's right.
Okay. So we've addressed a couple of issues that are pretty common across all the platforms we talked about. The concept of steady state is relevant. We're more of in a disruptive environment, and I'm going to ask Thad to kick off the comments on the first question, was how is our market inertia impeded or contributed to changes in the payments ecosystem?
It was really great having Ashwin in front of us because I think he defined every single problem in the payment ecosystem in about 15 minutes. Between card present, card not present, ACH not providing reconciliation, all those things just show how incredibly kludgy our payment system is. We're theoretically supposed to be, as he said, one of the most advanced countries in the world, but we are in fact not, and that's part of the problem. The good news, however, is because it's so complex and messy, we all have jobs, because that's what we're paid to do, is to figure out this messy stuff, and that's a good thing. One other thought, and I think it's really important in terms of both impeding and encouraging things, is all that being said, we have this massive, incredibly efficient, incredibly secure, monolithic network of payment instruments, MasterCard, Visa, American Express, Discover, that do a terrific job of moving a lot of stuff very quickly wherever it goes. And we're partly slave to that. I don't think in our lifetimes that monolith is going to go away. And the innovation that's going to happen is primarily going to be happening around the edges of that monolith.
Can you share?
Yeah. In our approach to the market is, during the different conversations, everybody has been talking about the mobile experience, and all those different experiences are related to a card. But the thing is, there is a huge segment of the market that doesn't have an account, doesn't have either a bank account or a credit card, or they just go with prepaid cards. So what we do is we have been creating a solution for all those individuals and also businesses that don't have a bank account but want to interact with the system. So we provide them a credit card and that credit card is helping them to start creating a credit history, and at the same time is providing them the benefits of the financial services through their different applications. They can tie to any mobile application other than ours. So basically what we're trying to do is we're trying to take the base segment of the market to take the other experience of the rest of the market.
Yeah.
Brenna, so you're working with startups. We're talking about inertia and the challenges they have in actually getting traction.
Yeah, so one of the things that I don't know has been talked about too much, although I know I talk about all the time, which is if you're a startup, it's just really hard to get a bank account. And I don't know if anybody in here has experienced that, but with de-risking, I know I've talked to one payments company, and I think they talked to about 30 different banks. Now, not because they had to go through 29 before the 30th offered them an account, but because one of them said, well, yeah, we'll give you an account for $10,000 a month. And that was not feasible in terms of fees for them. So that market inertia or it's not market inertia, but just the banking world is very conservative, and a lot of this technology is very untested and therefore risky. And so I think with the startups that I deal with, I mean, that is just that baseline thing I say on day one. When I say, that's a great idea, you need to get a bank account. And they're like, well, that won't be hard. I'm like, okay, sure, but I don't want to spend money. I don't want you to spend money on legal fees before you can go get a bank account. And so that's one of those sort of weird quirks of our system. And then sort of building on what Ashwin just said and Peter said it earlier, we're still running on legacy systems. And so that's another big piece of the inertia that is hard, because you can come up with this great idea, but then when you have to run it across the ACH system, suddenly that idea, it doesn't work anymore.
Right. So in line with that, what technologies, products, and services do you see are particularly disruptive? Because that's our concept there. We've gone from the steady state, and we're into continuous disruption now.
I think actually the whole PayFac movement is extremely disruptive. What basically has happened and what they're doing is they've taken payments and put them in the cloud. They had to do that because they primarily started in online, but when you do that, you get just data in the cloud. And I had a meeting with Stripe, and they were talking about moving into the physical world, and I was kind of surprised about it. And he said, well, once the card's entered into anything, it's data. Data is data. We do data really well, so why wouldn't we want to do that? You got PayPal coming in with now buying a POS company. So clearly for $2.2 billion, they bought iZettle, and so now they have POS. So that, I think the PayFacs are going to be a really big deal.
Brad?
For me, I think something that is going to be disruptive is when we figure out some of the use cases for blockchain that are on a smaller scale. So smart contracts and things like that people are doing, but I do think that has the potential to be disruptive. I think we're just not quite there yet. And I'll be honest, I don't think it's cryptocurrencies. That's not what I see as being the disruptor. From the people I talk to, I don't think that in 5 years we're all going to be here paying for things with Bitcoin. But, somebody in this room can prove me wrong. But I don't think Bitcoin is the disruptive technology to bet on.
Armando, you've talked about the large percentage of underbanked individuals. So where do you see the engaging technologies that are going to support those people?
Well, they don't have a bank account, but they have cell phones. And all of them, most of them have these smartphones. And so for them, is the engaging problem is not related to the technology, but on the contrary, is more related to the banking industry limitations or burdens. And this applies also to businesses, because in a lot of businesses, there is a lot of cash involved on the either collection or distribution. Just on the lift, for example, they were talking about the hurdles that they have when they are distributing payments. And we have been partnering with different commercial networks, so different businesses and persons are able to actually load their money onto their accounts, and through that they are able to transact on different levels.
Can I throw in one more?
Please.
I heard this yesterday, and I was really fascinated by it. One of the people here said that quantum computing could very easily disrupt and replace blockchain before blockchain even got going. And that's a really interesting idea. Quantum computing is really close. It's going to happen, and the potential for encryption in quantum computing is pretty significant. And so I would suggest that we start to at least look over the horizon a little bit as to how that's going to impact our space.
Great. So we have a lot of technology and a lot of services that are being introduced all the time that are different. So how do you sort through the truly valuable from the just unique and curiously different? Please.
Okay. I kind of have three criteria. First one is it's got to be quickly scalable. Secondly, it has to be digital centric. And then thirdly, it has to be data dependent. You take those three things, put them together. Those are kind of like the foundational rules for finding something out there that is valuable.
Mm-hmm. So Brenda, you work with the startups. You go through this because people come to you with a great idea, and how do you help them figure out if they can monetize it and get scale?
Yeah, scale is important. I think they don't think about that enough, honestly. And in some ways they shouldn't, right? I mean, if you don't want to be too focused on how you'll get to 10 million users before you have even one. But I think, when I talk to them, and it's often about sort of what are you really trying to do? What problem are you trying to solve? And does this solve a problem? Because too often to me, they have an idea, but it doesn't do anything for anyone other than seem cool. And especially in Austin, we have just a booming tech startup and a booming young professional, and the University of Texas is there. So you have all these people who are just ideas, but too often they're not truly coming up with an idea that anybody needs. And I think we've talked about this a lot overall with mobile payments, and I think there is obviously plenty need for mobile payments, but we're still struggling with that because, as we talked about, you can use your credit card just as fast or faster than you can tap your phone. And so I think about it that way, when it's sort of like, if you're coming up with something that's different, but it's not faster, it's not easier, it's not cleaner, it's not better, then it doesn't mean it won't work, but you're going to fight an uphill battle.
Yeah, it's like earlier, I heard the comment is, if you're not solving a business problem, then why bother? And Armando, as a CEO of a technology services company, you're probably approached by the new and different and shiny, and how do you differentiate the things that are important and valuable to your end users versus something that just seems like fun?
The profile of our users are less sophisticated than that. So we are basically focusing on doing it simple, easy, simple for the users. So some of these cool ideas are not precisely for our clients.
They're just cool ideas.
Just great ideas.
Okay. So, Brenda, I'm going to ask you to start on the next one and talk about how the regulatory environment has affected the payments innovation.
Yeah, so I think that, to me, is the elephant in the room. I don't feel like there's been that much talk about it here over the last couple of days, which is okay, except, in my world, payments is regulated, heavily regulated, and not just indirectly because you're partnering with a bank that's heavily regulated, but your PayPal, you're regulated. Your Facebook, which people forget, Facebook is a licensed money transmitter, you're regulated. Your Google, you're regulated. And people don't think of Google as being in a regulated industry, right? But they are, heavily regulated. And just in case everybody doesn't already know this, money transmission is regulated in the US at the state level. So you need 53 state licenses, because we include DC, Virginia, the Virgin Islands, Puerto Rico, you have to go state by state to get those licenses. And then you have to go through 53 different state exams and deal with 53 different exam teams who have competing interests. And that, just start right there to go get those licenses. And now maybe some of you in the room have been through this. You have this great idea. You're Venmo. And you are like, let's get to market. Let's go. And the first lawyer you talk to says, well, wait, no, take 2 years, put a hold on everything, and take 2 years and get 53 state licenses. In the case of Venmo, as is publicly available, they just blew right past that. They just went to market, and then they dealt with the problems later of paying some fines and dealing with regulators for ignoring regulations. So in my world, I mean, that right there stops regulation because your people don't go to market. They have an actually legitimate good idea, and then they're a startup with 3 guys and $20,000, and they're being told that one license costs $10,000, and it's going to take them 1 year to get it. Just, that's it. They just give up. The idea is done. They move on. So I work a lot with people trying to figure out how you don't need licenses in a legal and compliant way. For example, Lyft, they deal a lot with payments, as the presentation we just saw, but they're not a licensed money transmitter. So there's ways to handle payments and lots of payments in a sort of P2P kind of way and not be regulated, but you have to be very careful about it, or you have to pay a lawyer like me a lot of money and then regulators a lot of money. So I think and regulators are trying, and that's the thing I want to actually say, not to take up too much time, but I know we talked at the very beginning this morning about the OCC FinTech Charter and the Treasury report. Regulators are trying to fix this problem. At the federal level, the OCC is introducing this FinTech Charter. You can apply for one right now, if you need a lawyer to do that, hi. That would give you one license and you could operate nationwide. That is not, again, feasible for a startup. You're going to be a bank, which means you're going to have capital, which means you're going to have to meet all these requirements to be a bank. So if you're a new startup, you can't meet that. But if you're PayPal, you can, or Lending Club, or some of these other fintechs that they think will maybe get a fintech license. So then that's great, though. That's one solution to get this charter. That doesn't help the startups. At the state level, the states are trying to harmonize state regulations. They have something called Vision 2020. All the state regulators are committed to unifying the licensing process, so perhaps one application that gets distributed to all 50 states instead of 50 different applications, fewer exams, things like that. I worked on, when I was still a regulator, trying to introduce a regulatory sandbox in Texas. We didn't get one passed by the Texas legislature because no new regulations, but Arizona has passed one. It is active now. So if you are a startup and you want to go do some beta testing, live testing, you could use Arizona as your test market. That doesn't help you go nationwide right away, but then you have a proof of concept and you get some investment, and then you start applying for those licenses. So it's very hard, I think, for startups and innovators to really play in this regulated space, but I will commend regulators for trying to help, trying to come up with solutions.
Comments? Okay.
That's my soapbox. They don't have to.
Well, I want to throw one thing in as well, and it has to do with PSD2, which theoretically doesn't have anything to do with us, but it has everything to do with us.
Sure.
And that's the liberalization of data access that's going on in Europe as part of the regulatory process there. Somebody at the beginning of the dawn of the internet said information wants to be free, and that's exactly what this is about. And suddenly there's going to be third-party opportunities to use bank-related data that were not in existence before. It's probably going to be regulated, but it's going to be regulated in a way that makes it usable, I think. I think those of us who work primarily in the U.S. need to be very much aware that this is probably an inevitability in our market. And we need to be prepared for the fact that there are going to be fintechs out there that can access Wells Fargo bank data and develop products to sell specifically to those customers.
Well, and just, I'll add to that real quick. If you are designing an app right now that is wholly based on screen scraping, be prepared to have to rewrite all your code to access those APIs when screen scraping gets banned here in the US the way it's getting banned in Europe. it's coming. It's not going to be by mandate from the federal government anytime soon, but it is going to be a marketplace solution, or it is going to come from the federal government when things get more broken.
Okay. So we're going to move on to the next item about how are different markets selecting different transaction platforms and the services they provide.
You know, there's some really great examples in the world and of how platforms are created. And one of the great truths is that they're generally created in a place where the friction is so high that something isn't happening. So let's take China, for instance, where you had 80% of the people in China had bank accounts, but nobody had a credit card or a debit card because they weren't allowed. So it was a cash society, and so Alipay created. And then the other thing was when online happened, nobody could trust the merchant, nobody could trust the consumer. So Alipay came out and solved two problems at once. One is they created a payment ecosystem that everybody could use using a QR code. The second thing they did is they put in an escrow capability in the account. So when you ordered from a merchant, the merchant wasn't paid until you received your goods and you were satisfied. So suddenly they put trust into the ecosystem that wasn't there. And so I think the biggest changes and the biggest opportunities are where there's significant gaps and significant problems that are not being addressed right now.
And Armando, clearly, you're pioneering platforms for cross-border payments and underserved are things that we're seeing grow and develop around the world. Care to comment on that?
Yep. There is a great challenge for all these students and people traveling all over the world to actually be able to have a clear, secure exchange rate, to have a bank account, to be able to transact on a secure basis. And what we are seeing and what we're trying to do is trying to get all those pieces of the concerns of the users on a one single application. So for example, we have been providing one individual or one business accounts on different currencies, so they are able to actually move money from one account to the other, and they can do that ubiquitous, so they can send to a related party, whatever it is. And leveraging on the banking system through the ATMs and through the rail payments is easier for them to be on the market.
All right. Okay. So just a couple more questions, and then we'll open it up to the floor. So one of the challenges that we have is we're trying to enhance the guest experience, but our merchants are the ones that are actually delivering the solution. So how can our merchants be up to speed and know what the correct technologies are to adopt and to employ in their services to support their customer experience?
I think the first thing I would tell a merchant if I were a processor is that they need to assume permanent disruption from this point forward. It's never going to be the same. It's never going to be the same last week as it is next week. And there's a lot of stuff going on that we don't talk about in this market. Alipay and WeChat Pay are here in the US where Chinese customers are shopping. I don't think it's going to be universally there, but on the flip side, every merchant in this country should assume if they're online, they're a cross-border merchant, because people are buying everywhere. We all do. We do it all the time. Whether we know we do it directly or indirectly, it happens. So the first thing is to assume that it's disruptive, assume that you're global, and assume that you don't know what your customer needs and you need to ask your customer what they're going to use.
Okay. Any comments? We're good. So last question to the panel will be, what technologies and payment applications do you see consumers, end users, adopting at the pace that we're talking about disruption? So I'll start with you. Popular.
I think dual interface cards are about to take off. Citi is really starting to get behind it. There's been kind of a hangover on dual interface because the issuers just issued EMV cards. That was pretty costly. The merchants all just, spent $1 gazillion on new POS terminals. They haven't lit up all all the NFC yet, but if you look at what's going on in Europe and particularly in the UK in terms of the percentage of contactless transactions, it's huge. And if you think about, we've talked a lot about the fact that mobile payments haven't quite gotten there because there isn't quite a value proposition there. It's too much of a leap in some ways to go from plastic to phone. It's not much of a leap at all to go from dipping to tapping with the same piece of plastic. So the level of friction is much, much lower, and I think that that's going to be something we're going to be seeing a whole bunch of in the next couple of years.
Okay. Any comments? We can.
Well, I don't know if it's really a, sort of a technology, but I just, in my practice in the space it is truly remarkable how consumers want everything on their phone. And I know we all know that. We're here at this mobile payments conference, but one of the big things we're working on is end-to-end digital mortgages. And right now, yeah, you can get a mortgage from Rocket Mortgage on your phone, but that's not, you still have to go sign in paper 30 days later. We're talking about truly digital, e-notarization and everything completely digital end-to-end on a mortgage. And that's fascinating for us as we try to work through how that's going to work. It's a little bit terrifying to think about truly getting a mortgage on your phone, because we're no longer talking about paying for an $8 ride for Lyft, right? This is a 30-year commitment on your phone. And so I think sometimes we think about payments just as consumer payments and things like paying for coffee or paying for rides, but what we see is, really on the business side, is that huge business demand for cross-border payments, for digital solutions, and then you're talking such big dollar amounts that it's really a whole different ballgame, but they are all moving that way, not just for their consumers, but for themselves too. The CEOs also want to do things on their phones, so, yeah.
Okay. So that's it for the covered material. I'd like to open it up to the floor if anybody has any questions, please.
Mr. Guzman, you guys have been, for the past year, using X-Rapid. Can you, the positive effects you have seen by using XRP as the cross-border payments?
Our idea of getting that is, first of all, we want to provide as many options available in the market to our clients. So what we are offering them is to be able to get into the rail that they will think is the best rail for them. And on this case in particular, we have been some very slow adaptation to that. But we have seen that some users on Europe, especially in Europe, are more eager and more enthusiastic about that.
Questions? Please.
Does Alipay have any impact on the merchant processors, or they just get treated like any other payment?
Merchant processors here in the U.S.?
In the US?
Yeah, the way it works is that the merchant processor does a deal to accept Alipay, and then it's basically a standard deal. It's nothing significantly different.
And in like China, there just is no such thing as a merchant processor?
In China, the Alipay is the processor, so it's a closed loop system in China. Both Alipay and WeChat Pay are completely closed loop. They're not interoperable, so you go to a store, you'll see both QR codes sitting there.
Okay, I know we're pretty much at the end of the day. Thank you all for joining us. No other questions? Thank you very much. Thank you, panel.